Well, hello, friends, and welcome to today's live level up conversation. It is Thursday. Happy Thursday. It is great to be here with you, wherever you're joining me from. Thanks so much for making the time. Well, let's dive right in.
And now, get ready. I present to you Level Up with Winnie Sun. Market Update. Award-winning financial pro. Welcome to Level Up with Winnie Sun.
Welcome to the show. For those of you who are brand new, I'm Winnie, your host, an award-winning financial pro, Forbes contributor, and a CNBC council member and contributor. And yes, we are streaming here live, and it is wonderful to be here with you. Happy last week of October. Can you believe it? We are officially in the last quarter of the year as we go through, and let's see how the year ends, right? Well, let's just say that today wasn't one of the best days in the financial markets. We're actually seeing red across the board. Dow closed down 109 points today. Yikes. And that's not all. NASDAQ closed down 377 points. Oh, yeah, painful day. Especially those of you who are invested in tech, today was a painful day. But remember, it's not just one day. We're looking at long term. S&P 500 also down 68 points today. Yeah, a lot of stuff happening. But that being said, most importantly, there's been a lot of financial news. I want to jump in and talk to you about some really great and some not so great. We'll let you decide on what that is. But for those of you who are wondering why the financial markets were in the red today, part of the reason, of course, is some of the Fed announcements. We'll talk about that a little bit. And of course, what's happening in Washington, D.C. with President Trump and discussions with China regarding tariffs and trade relations and all that. But before we get into that, I wanted to switch discussions just a little bit. If you didn't know already, there's been some good news, especially for those of you who are Swifties out there, because Taylor Swift's, yes, her album, The Life of a Showgirl, has officially shattered records, reigning supreme once again, rewriting her legacy. This is being shared by E! News amongst many other publications, some financial included. Billboard also, Gary Truss from Billboard also talking about this massive chart domination. Taylor Swift and the Swifties are probably very happy because The Life of a Showgirl is now at 135 million in its first week of earnings. 4 million units have been sold, setting a modern era record. It continues to remain at number one at the Billboard 200 for 3 straight weeks, which is huge, right? Obviously, very, very catchy. People are loving the music. Let me just tell you, I can't get The Fate of Ophelia off of my mind. I mean, it's such a catchy tune. It just kind of like you move it. If you haven't heard it yet, definitely check it out. It tops now the Hot 100 for its third week. This marks sort of the first time in Billboard history that both an album and its lead single debuted at number one and stayed there for 3 consecutive weeks. So, so that's big news because we're talking about a tremendous amount of sales, a tremendous amount of revenue. And for someone who is continues to be a young artist, this is exciting. So if you didn't know already, definitely something to check out. But congratulations to Taylor Swift and the Swifties. And I'm sure this is good news for many of us here as well. I mean, we get to enjoy her music, and I'm sure Taylor Swift is paying quite a bit in taxes this year to the American government too. So, what we'll have to hold on to positivity as much as we can. And I'm going to chalk that up as maybe some good news for, quite a few people. Now, with that in mind, on the flip side, there's been a lot of changes in the financial markets. And this isn't as good news because it was starting to get a little bit better, but it changed a little bit. And that's for people who have been on the sidelines looking to purchase their first home or their next home or even a refinance, because unfortunately mortgage rates were going down and unfortunately they just spiked right up because of the recent Fed rate cut. This is being reported by CNBC. Mortgage rates surprisingly went up, not down, after the Fed cut its key interest rate this week. Now, the average rate for a 30-year fixed mortgage rose by 20 basis points. When you're financing a home, let's say, 250,000, 500,000, maybe even $1 million, every basis points really hits your bottom line. It can cause, we're talking about a tremendous amount of difference on your monthly payment. Well, the 20 basis points hits at 6.33%. That's up from 6.13% just a few days ago. Now, unfortunately, why did this happen? Well, this was because this reaction happened because the bond market had already priced in some of the Fed cut that was announced by Fed Chairman Jerome Powell. So the mortgage rates, well, they hiked right after the Fed cuts. So this isn't really something new. We actually saw this happen back in September as well. But certainly for people who have been on the sidelines looking to purchase their first home or even refinancing is not good news. So hopefully better days ahead. Hopefully we see better mortgage rates, but currently not so great. Now, speaking of things that are not so great, you can see why I started with Taylor Swift. We need to have some positivity, and even in the financial markets. Well, if you didn't know already, the last quarter of every year, I always call it kind of layoff season. And it's unfortunate that that's the case. But if you think about why that is, it can kind of make sense. Not to say that it's a good thing or that it's something that we ever want repeated every single year. But what happens is companies in general, especially publicly traded companies, have to report their earnings and their reports. And this is key data for shareholders as they make decisions whether to continue to invest in certain companies or if they're making changes to their portfolios. Well, one of the big costs, as you know, for companies in general is their employee costs. That's usually one of the biggest costs. Not only are companies needing to pay payroll, but then we're talking about benefit costs, right? Like things such as 401k and other health benefits and things like that. Those also get sort of put on top of employee costs. Well, Amazon unfortunately is doing big layoffs. Now, Amazon, of course, plans to cut off plans to lay off about 30,000 employees. And we're not talking just like warehouse employees. We're also talking white collar workers. This is being reported by Business Insider. Amazon, of course, started mass AI layoffs already, laying off about 14,000 employees now. But it's going to be up to 30,000 of white collar jobs expected to be completely eliminated, not just temporary. Now, of course, they're citing AI efficiencies. Now, if you don't work at Amazon, you might be, somewhat relieved, but know that this is happening very, very quickly. In fact, CEO Andy Jassy of Amazon has forecasted these gradual changes, but now Amazon has definitely stepped on the gas, and they are not going to be the only ones. But that being said, yeah, they said they just need fewer teams, fewer layers. Everything's just happening more quickly, faster innovation, and AI is able to equip more companies to have less people to do more quickly. And so that's just sort of a beginning. In addition, let's talk about AI because I want to segue over to what's been happening at Nvidia. If you didn't know already, of course, Nvidia hasn't. It's not a brand new company. For some of you, you might be like, well, I knew that Nvidia made chips maybe for my computer or something like that, but maybe you didn't hear about it that often as you have in the last couple years. And that's for good reason, right? Nvidia has become a major player, if not one of the biggest players in the space of AI. They actually have become the first publicly traded company to reach $5 trillion in market value in just 3 months after crossing the 4 trillion mark. This is huge. The company's explosive growth, of course, is powered by the really huge, ravenous global demand for their GPUs, which, as you know, are critical to powering generative AI systems like ChatGPT. And you know how when you want to, maybe make that really unique image or using text and other text generators, well, that's all powered by these types of chips. So Nvidia's valuation now even surpasses to give you an idea how big this is, Nvidia, the company itself, their their GDP or their valuation now exceeds the GDP of countries including India, the UK, and even Japan. Crazy, right? Yeah. But yeah, that just gives you an idea of how big this next industrial revolution is, and we're still just sort of in the beginning stages of how big AI will be. Um, but yeah, that just gives you an idea just how big it will be. But also, it's not all bad news, because one area that is interesting is, Fed Chairman Jerome Powell just this week made some adjustments to the Federal Reserve interest rate announcement, and this is reporting by CNBC, of course. They lowered their benchmark interest rate by about 25 basis points this particular week. So now it's in the range of 3.75 to 4%, making really the second cut of this year in a row, right? So 25 basis point cut for the Fed rate. Now, why this is important to talk about is, in addition to this, Fed Chairman Jerome Powell said, and he mentioned the idea of AI, and a lot of people are being worried about, like, the internet bubble, and how there was companies that really had these crazy high valuations, and would this be a sort of that sort of role once again in AI, and should investors be concerned about it? Now, the Fed, of course, Fed Chairman Jerome Powell said this is slightly different, because some of these valuations, some of these companies, without him naming names of which companies, he said a lot of the AI names that seem to be very popular actually do have earnings to justify some of these valuations. Now, that being said, really, we don't know exactly what names he's mentioning or what companies and whatnot, but that does give us some picture of really the strength of AI, and how even at this very early stage, that companies are able to use this new technology to increase profitability, and that the companies themselves who are invested their efforts and energy in developing new AI technology and tech hardware and whatnot, that's actually beneficial to them as well. So that being said, I want to segue a little bit over to the talk of student loans. Now, we talked a lot about student loans when President Biden was in office, and we've talked a little bit about it since President Trump has taken over, but not to this degree. And it hasn't been so much now, because there's been so much discussion about inflation and tariffs and everything else. Well, there's going to be now major student loan overhaul coming, and starting next year until the year 2028. This is being reported at Forbes, because tax-free forgiveness ends January 1st of 2026, which, is just a few months ago. Student loan cancellation will once again be taxable unless forgiven under specific programs. And so borrowers must switch to different programs before the end of the year of 2025. So if you have a student loan, or you have someone in your life that has a student loan, this is definitely the time to be paying attention and reading and learning about your different options, because this could tremendously impact you. In fact, deferment and forbearance limits will begin July 1st of 2027. So new loans issued after this date are going to be facing stricter limits on hardship and unemployment deferments and things like that as well. So it's really important for parents and students to be paying attention to this, because, so for example, critical deadlines for Parent Plus again is going to be in 2028. So consolidated loan changes and different ways of making payments and switching to different types of loans. So anybody out there who is thinking about that, or taking out or consolidating federal loans in 22 and 6 or later, are probably going to be facing stricter guidelines if the laws don't change. So timing definitely matters. If you have one of those, definitely do some research, read, make phone calls, figure out what's best for you, and make sure you're proactive right now. All right, the next thing I want to talk to you about is, of course, we talked a little bit about mortgages. Now I want to talk a little bit about wealth as well. And we're going to go to a story being shared on Market Watch. Okay, if you didn't know already, the home price growth now is lagging inflation. US home prices grew by just 1.5%. year over year in August, which far below the 3% inflation rate, signaling now a loss in real housing wealth. That's a big thing, right? So many times, that the importance, there's been so much emphasis, maybe by your parents or grandparents, about the importance of owning your home versus renting and continuing to rent. Well, now you're actually seeing stagnant housing prices in the housing market. This is now the slowest home price growth in over 2 years, which reflects a cooling market. Now, this could be good news if you're in the market to purchase real estate. But then again, we just talked about how mortgage rates went up. So that wasn't good either. But now, with home equity sort of rising slower than inflation, for many Americans, their biggest source of wealth is in their home. And now it's shrinking in real terms, despite stock market gains, which now reminds you, if you're going to be investing for the long term, right? If you're looking to build wealth, you also really want to pay attention to diversification, which is critical. So, in addition to, for example, your 401k at work, or maybe you're self employed and you have a SEP, and maybe you own your own home, it's important always to remember the value of diversification. Like, you're not all in the stock market, or you're not all in one particular stock, or all in real estate. Having diversification is important, because more and more people now, more people do own homes than stocks. That's just sure to be the case. 65% of Americans own homes, but only 43% of Americans own stocks, making this slowdown especially painful for those who are sort of middle income families, who really have most of their wealth tied to perhaps their own home. So, people are saying that this is important to recognize that this is happening, but experts are stressing that this isn't a real estate crash. So no sense in like getting frantic and worried and right away. But it does send that message of, it's important to be diversified. It's important to seek out financial advice. So I would say this is a really good time to meet with a financial advisor, if you haven't done so already, to sort of figure out your plan towards financial independence. All right, let's continue on and talk about what's also I'm like sort of like trickling different stories on AI, because I'll be honest with you, like when I prepare for the show, I like to bring in different topics to give you different perspectives on what's happening in most different facets of the financial world. But so often there'll be one story that comes up. I'm like, oh my goodness, I need to add this in, and then I put in my notes for that, and it follows in where it follows in very organically, because I want to talk about what's happening here with OpenAI. Okay, so if you didn't know already, OpenAI has, of course, converted into a public benefit corporation now, with approvals from both Delaware and California's attorney generals, which signaling sort of this end of a year-long sort of governance debate. Now, um, with that in mind, OpenAI's nonprofit still holds control, which is aiming to keep the company's mission, which is to safeguard, AGI for humanity, to make sure that stays intact. But do know that doesn't mean that just because they're nonprofit, they don't have major investors, because Microsoft now owns about 27% of OpenAI's for-profit arm, which now surpasses the nonprofit's 26% stake that they own, due to sort of a revised 135 billion valuation of that partnership. So we do know that OpenAI CEO Sam Altman had hinted at a possible future, IPO. Although currently no IPO has officially been announced yet, but it's just interesting to see how these companies are sort of changing and thinking about their long-term plans, and or also just their formation in general. So the newly named sort of Open AI Foundation plans to grant about $25 billion towards health, cybersecurity, and other public good initiatives over time. But there continue to be legal challenges. The one and only Elon Musk's lawsuit accusing OpenAI of straying from its true nonprofit roots does continue. And so we'll see what happens there and what the federal judge decides. But that's sort of what we're watching right now, just to see how that's going to unfold. Right. And I don't know about you, but, we continue to have concerns about the future of AI and what that looks like, not only from a legality standpoint, but also what that looks like for mankind. Like what that means in terms of work. Will Americans still be able to support themselves if AI continues to continue to take more and more workplace market share? Now, speaking of AI, let's also continue to talk about Elon and what he's been doing with his own technology. So, as you know, he has AI technology called Grok, which you can utilize through his X platform. But now he's also introducing a new AI encyclopedia. This is called Grokipedia, if you didn't know already. It's a crowdsourced online encyclopedia designed to compete with Wikipedia, claiming that it offers a whole truth. So, of course, Elon has been critical of Wikipedia, calling Wikipedia propaganda filled and discouraging donations to it. And now he's all in and promoting Grokipedia as a truth focused alternative. My question would be this: whose truth are we talking about? Is it the truth, or is the truth that as you determine it to be, right? Like, I guess whose truth is it is what I would say. So this is going to be powered by XAI and Grokipedia. Seems to be backed by the same XAI technology and model. But yeah, this is a new thing. The site is going to, they say, have sort of a minimalist interface. It currently hosts already about 885,000 articles, which of course is very small compared to the 7 million plus that Wikipedia currently has. But many of Grokipedia's entries have fewer sources than Wikipedia's counterparts, which of course also raises concern about whether this is true and how accurate this truth is and the depth of the information on that as well. So you'll have to be the judge of that. If you're going to be using Grokipedia, you're going to stick with Wikipedia, and yeah, changes. Lots of changes happening. Speaking of more changes, in addition to Amazon, UPS is also announcing that they're cutting 48,000 jobs amid strategic overhaul to boost profitability. This is reported by the New York Times. That's a lot of Americans now that are going to be, I'm assuming they're mostly Americans, out of work. 34,000, they say, are going to be from drivers and warehouse workers, mostly here in the United States, and 14,000 from management. So yeah, that's rough. So because my question to this is, we know about AI. We know the importance of the technology. We also know that a lot of companies want to run lean, and so that they can help with shareholder value and whatnot. But what happens to Americans who lose their jobs, and who's going to, where are they going to find new work? And we know that workplace change doesn't happen overnight, and having new information and new education, re-upping your skill set, it doesn't happen overnight as well. What happens to those Americans would be my question. So we're seeing the union obviously is taking a stance here. Looks like they're trying to put more pressure on UPS. So we'll see what happens. But UPS is claiming that all layoffs will comply with the union contract, and of course the union hasn't then responded just yet as well. And yeah, they're just saying that in general, Amazon deliveries have declined significantly. UPS has reduced Amazon parcel deliveries by 21%. I imagine some of that also is because of tariffs, right? And also inflation. So more Americans perhaps are being more selective of how they're doing their shopping, maybe more needs based versus wants based. And we're going into the holiday season, which will be interesting to see if people continue to spend as much as they do typically during the holiday season, or if those numbers will come down significantly as well. I imagine you have a guess on that. I have a pretty good guess on how that's going to unfold as well. But with that, let's continue on because we've got more stories to talk about. And one of them is with Lucid. Now, Lucid is also introducing something brand new. This is being reported by Reuters. Lucid is going autonomous. So they plan to launch their level 4 self-driving mid-size EV, which is capable of operating with minimal human interaction or input, which is a major step towards full autonomy. I don't know about you, but I can't wait till my car does everything. I can't wait till I basically say, car, take me here, and it just does it. And I don't have to worry about my safety and everything else. But this new technology is going to be powered by Nvidia. Nvidia powered intelligence. This EV is going to use Nvidia's Drive AGX Thor chips and software tools to power both their self-driving system and factory operations as well. So their new models were going to combine a bunch of cameras and radar and a whole bunch of technology similar to Tesla, which, as you know, relies solely on cameras. So Tesla, Rivian, and now, of course, Lucid, which has their luxury Lucid Air model as well. The new EV is going to target sort of a broader market, competing directly with Tesla's Model Y and Rivian's R2 SUV. So this model is going to sort of mark Lucid's strategic move from luxury sedans into high volume EV segments. I don't know about you, but I kind of love this information because I love the idea of more technology competition. So hopefully, you and I all get better, more efficient vehicles that can drive themselves and are safer. And hopefully, that brings the cost way down because, as we know, a lot of times these vehicles can be very expensive. And if they can keep them electric, even better because we know that there's been a lot of challenges with the whole a lot of the benefits for climate change aren't quite where they were before, and hopefully this is just something that will continue to drive consumers to cleaner vehicles in general. So with that, I feel like that's a lot. That's a lot that we shared today. And then I'm going to keep some more until we come back. But with that, thank you so much, my friends, for being here and being a part of today's Level Up Live. It is always a treat to spend the time with you. And hopefully you learned a little something or, heard a little something that is helpful for you as you make your own decision and plan towards financial independence. With that, thank you so much for being a part of today's Level Up. Do me a favor, hit that like, subscribe, and tell a friend about our show. And to catch full past episodes of Level Up with Winnie Sun, you can check out NASDAQ, Amazon Fire, Samsung, LG, Roku, and of course, wherever you are watching this stream from as well. And for those of you who've been sharing the show online, thank you so much, Joshua, Sadiq, Benjamin, I see, Wesley, so many of you. Thank you so much for doing that. And of course, tag at Winnie Sun so I can see. Truly appreciate you. Have a wonderful rest of your week, and I'll see you again very soon. Take care now. Bye bye.